Hey gang, I'm Dr. Who and this is Accounting is a Joke, where accounting makes sense so you can make dollars. Today we're going to do a walkthrough problem on how to properly use the accounting equation to solve for unknown equity components. So if you're unfamiliar with stockholders equity or you don't know how to use the accounting equation, I provided a link to a video that'll get you up to date in no time. So without any further ado, let's get it. Wisco advertising balance sheet data for May 30th and June 30th as follows. Let's click on this. So they've given us total assets and total liabilities for May 31st and June 30th respectively. No stockholders equity. And then it tells us to read the requirement. For each of the following situations that occurred in June with regard to common stock and dividends for the corporation, compute the amount of net income or net loss during June 2024. And we have these three different independent scenarios. Company issued $10,000 of common stock and paid no dividends. Company issued no common stock and paid cash dividends. Company issued $12,500 of common stock and paid cash dividends of $30,000. Alright. Begin by identifying the accounting equation and the formula to calculate the change in stockholders' equity during the period. So, what do we have so far? We have some accounting data that gives us our assets and our liabilities, which means that we have to solve for stockholders' equity. We see that part already. And they want us to calculate net income. But first, they want us to use the accounting equation. Okay. So we know what the accounting equation is, gang. Assets equals liabilities plus stockholders equity. All right. And the stockholders equity equation. Well, what do we know about stockholders equity? Broken down into two parts. Paid in capital, which is common stock, and retained earnings. Retained earnings is simply income gain, which means that we measure our income by taking our revenues minus our expenses. If our revenues exceed our expenses, we call that net income. If the expenses are higher than our revenues, we call that net loss. But don't forget, retained earnings is decreased by dividends, because dividends is when the company distributes income to shareholders. So we always subtract dividends from retained earnings. So, looking at this stockholders equity equation, we would obviously always start with beginning stockholders equity. We're going to add common stock. We're also going to add net income, or subtract net loss, and we're going to subtract dividends. This is it right here. Let's see what we have. Fantastic. Let's go. For each of the following situations that occurred in June with regard to common stock and dividends of a corporation, compute the amount of net income or net loss during June 2024. All right, gang. So here's the deal. If we go back to the balance sheet data, we see that we don't have stockholders equity. We have to calculate that. So that's the first thing we're going to do. So let's calculate the missing stockholders equity using our accounting equation. And we already know at this point, if we take our liabilities and subtract it from our assets, that will back us into stockholders equity. So with our trusty calculator, we are going to take for the month of May, $122,000, and we're going to subtract $66,000 of liabilities from the assets to give us a stockholders equity of May of $56,000. Then we're going to take the June 30th balance of assets, $287,000, and we're going to subtract the total liabilities of $144,000. And so our stockholders equity for the end of June should give us $143,000. So now that we have stockholders equity for both the month of May and the month of June, we need to calculate the change, gang. Why do we need to calculate the change in equity? Because we're trying to solve for the unknown component of stockholders equity during that period. And so we know that stockholders equity are only broken down of the two parts, which consist of common stock and retained earnings. Retained earnings is the net income that's earned during the period minus the dividends. So if we calculate the change for the period, we would have to take the $143,000 for the month of June and subtract that from the $56,000 from the month of May. So obviously our stockholders' equity gain increased by $87,000. And so what we're going to do to find out what is net income is we're going to use the formula, right? We're going to use our stockholders' equity formula. So it tells us in scenario A that the company issued $10,000 of common stock and paid no dividends. Well, based on our formula, that increase in stockholders' equity of $87,000 can only come from common stock and retained earnings. So for scenario A, if we issued $10,000 in common stock, then obviously we know we had to have some type of net income. Why, gang? Because in this period, no dividends were given. And as we can see, we still have to justify where the $87,000 came from. That particular increase in stockholders' equity, $10,000 of it came from common stock. So obviously, the other portion must be net income. So if we take the $87,000 and subtract the already accounted for $10,000 of common stock, we clearly know that our net income must be $77,000. So if we put $77,000 in here, check our answer. Bam! Bags all day. Scenario B, the company issued no common stock, but it paid cash dividends of $3,000. Okay, gang, we are still representing the $87,000. We're going to use the same formula, but this time we have no common stock that was given. Since no common stock was given, we still know that that $87,000 increase in stockholders' equity has to come from net income. We just have to calculate the amount. But this time, we've given $3,000 in dividends. And we know dividends decreases our retained earnings balance. So if our retained earnings balance must be decreased by $3,000, but we still had an increase of $87,000 in the period for stockholders' equity, obviously our net income had to be $90,000. If we take the $90,000 and plug that in there, check our answer. Nice work. And last but not least, the company issued $12,500 of common stock and paid cash dividends of $30,000. Okay, gang, in this particular one, we had both situations happening at the same time. We still have an $87,000 increase in stockholders' equity, but this time we know that we gave common stock for $12,500, but we also gave dividends of $30,000. Now, based on those two components in the formula, we know that we are still missing a component to help justify the increase of $87,000. That's how we know that we had a net income. So, if we transpose the common stock of $12,500 to the left side of the equation and transpose the cash dividends of $30,000 to the left side of the equation, we should be able to calculate how much net income we have for the period. Let's do it. $87,000 represents our increase for the period, and that common stock now needs to be subtracted to bring it over to the left side of the equation, and the dividends needs to be added as well, bringing it over to the left side of the equation. And so that should give us a net income of $104,500. Bags! So that pretty much wraps it up, gang. A quick, easy illustration of how to back into the accounting equation to solve for unknown components. This is very critical to your foundation of mastering accounting. So if all this stuff made sense and those brain neurons were firing, please like, subscribe, and share the channel with your friends so they can chase the bag as well. As always, I'm Dr. Who, and I appreciate your time, and I'll see you soon.